Okay, we are back with another portfolio update. This is the last one of this week. We made our last buys on Friday, and we did actually buy a new company for this portfolio. It's not a new company that I've purchased. I purchased shares earlier last year, but this is the first time buying it in this new portfolio because I think it's such an interesting company. It's worth putting in. So first of all, we'll go through an update on the portfolio, what we're running with at the moment. So as we know, when I started the portfolio, I bought quite a bit of Grab just because I thought that was most undervalued. It has continued dropping. It's had an absolutely terrible week. I'm not that fussed at the moment, to be honest. I still think it's a good company. And unless that thesis change or I see anything worrying about the numbers or the growth rate, I'm not going to be revisiting that. So in terms of my investments at the moment, I am going to be dripping this money in. We're at a higher period of the market, so I don't want to go all in at the moment. I'm making a bit of interest on my cash, and I'm gradually buying stocks that I find appealing at the right time that I find them appealing as well. So we're very heavily in Grab. We've got Bitmine as well, which is it's very depressed at the moment, and it's a little bit of a crypto play. If we think Ethereum's going to go up, then Bitmine will benefit from that as well. So that's the reason why I'm in there. And then up the top here, we've got Nebius, which is the new addition that I added to this YouTube portfolio. The reason I bought it is it's been sitting around this kind of $100 mark. And to be honest, I would prefer to have it cheaper. In my other account, I did buy some shares towards the end of last year around just over the $80 mark and the $90 mark. I originally started bought my first shares around $45. So my average in that account is a lot lower, but I didn't want to miss out on a run in Nebius because I think it could do well. So I bought my first couple of shares in this portfolio, only 2 shares right now. I did get them, my average at $103. We finished the day at $108. So I did get a fairly good buy on the day, but in the long term, that doesn't really matter that much. So that is the new purchase. So what I wanted to go through today is we did have some recent news for Nebius. So we pop over to this screen. So what I'm not sure a lot of people know about Nebius is that, let's go over to this. They do actually own quite a few other companies. Nebius used to be a part of Toloka, I believe it was, which is basically the Russian Google. That had to get broken down into its parts. And so Nebius is what came and went public on the stock market again. But they also have a lot of other companies, which we'll go into in a bit. But one of these is ClickHouse, which is I believe it's a data labeling form. I can't remember what one ClickHouse is because they have another one that's similar. But basically, this is one of the companies that Nebius owns a big chunk of stock in. And now this is recently raised at a much higher valuation. So it closed at a $15 billion valuation. And that means that Nebius is part of this stock, which I think is around 28%, has just taken a big upgrade. So I think out of what Nebius is worth, it owns $4 billion just in ClickHouse stock. So that's another big positive bit of news for Nebius in that their actual valuation has gone up technically, but also it shows the value of these other AI-related companies that they're all playing in. And they've got other companies that they're playing in that could also see these same catalysts and are still raising money and growing. They've also got their other business, Toloka, which is a very interesting company that's invested in by Jeff Bezos. And Nebius owns a big chunk in that, so we could be seeing a similar thing from these other companies as well. I did put together just on Gemini, just to get a quick summary of what companies they do have. So Nebius, obviously the parent company, and these are the other companies which are quite interesting that they own a part in. So ClickHouse, which is what we just went through, they own around 28% of ClickHouse. This is just raised at $15 billion. So $4 billion of that is kind of equity value for Nebius. You can see here their actual market cap at the moment is 27 billion. So 4 billion of that is already included in this valuation. We're not even talking about the Nebius's activities as a business, as a data center. Also got AV Ride, which is an autonomous vehicle platform. They own 83% of this, so a huge controlling stake in AV Ride. They do actually have autonomous delivery robots going around in some places already. it's quite an exciting company just to have a part as Nebius, basically a free upside on Nebius. Basically, if they do start doing some more interesting stuff with AV Ride, they own a very large percentage of that, and it just goes into kind of all the data and the value that Nebius has. And we've also got Toloka, which is what I spoke about. Sorry, Toloka is the AI data labeling business. ClickHouse is the AI analytics business. I believe one of these as well, Tesla is actually working with to run a lot of their stuff as well. So they're a very big player in this game, Nebius, and their other companies. Toloka AI, again, it says they own a majority stake. Jeff Bezos Ventures is invested in this as well. They own 340 million in that, 2 billion just in AV Ride, and then 4 billion in ClickHouse. So adding all these together, we've got a good, what's that, 7 billion of equity of this is already just included in other businesses' value. So it's essentially taking the actual value of Nebius as a data center play even cheaper, down to 20 billion. So one of the other reasons I bought today is just because it reminded me, not so much, I've known this for a while, but it does remind you that Nebius has got so many areas that they're playing in. They're not just a data center where they're renting out NVIDIA GPUs to people. They're doing so much around the AI space. And when they're doing so much, there's so many more opportunities for growth, for profit, and also for catalysts, which are going to help the narrative of the stock over the next few years. So moving on from that, we're going to go on to, well, let's have a quick look at the Nebius chart at the moment. So where are we? Okay. Cool. So looking at the chart, this is kind of where we're at with Nebius. So if we're going back all the way, well, the area to look at here is basically when it re-IPO'd, which I believe was down around here at the end of 2024. I think I bought my first shares probably around here. Where's that? Around June? Yeah, that makes about sense. So this is when I bought like kind of the majority of my shares. I have bought a bit more up around this area as well. But you can see we had a really big jump in the share price, peaked up at 140. It dropped quite heavily, dropping down to 70, 74. But what has been quite nice is it has sustained this, and it has pretty much created a new base. I'm not really one to go off of charts and stuff like that, but it is good that I like to see when they have had a big run up in the stock price. It's taken a drop down and it has managed to give itself a new base. So it's kind of earning its right to be at this price. Now, it wouldn't surprise me at all if it drops a bit more, but I don't want to be sitting on the sidelines, and I do want to be acquiring a bit of this stock because I'm happy for this for the long term. I don't know whether it's going to drop or it might be back up to 140 and I want to miss my chance. That's why I'm just kind of gradually putting my buys in here because I'm confident about this company over the long term. Now we'll move on to the other company, which I also own, and I'm thinking of buying a bit more of in this portfolio, and that is Meta. So Meta had just been stuck with a lot of bad news recently, or bad sentiment. They're spending a lot of money in CapEx. They're spending a ridiculous amount of money on GPUs, and people are worried, okay, what are they doing with all this GPU usage and all of this CapEx spend? For someone that's run Facebook ads for a decade, I am very knowledgeable about their product. And I think people underestimate just how much they use AI with their targeting and how they serve stuff in Instagram's algorithms, for example. I don't think people actually understand how great that is. I remember running ads back when they took the massive drop, which is, where's that going to be? Around here. Yeah, here we go. So I remember running ads when they took this big drop back, where was it? Here? Yeah, during 2022. They went from 400 down to, 80. That was all due to the way that they targeted using pixel data and interest targeting. To cut a long story short, that was due to iOS changing how much data they gave back to apps like Facebook. What has happened here, and I know from running ads around 2024-ish, they completely changed how they're serving ads, and they completely changed how they're delivering organic content. So there's now all AI driven. How I personally run Facebook ads for clients and how I target different things has completely changed. You don't do interest targeting. You don't say, I want to target someone in this demographic with these interests. You just create creative, and Facebook is so good at identifying that creative, analyzing it, and then serving it to the right person at the right time in your specific niche. So I personally know how good their AI is. And also I think people underestimate now that I mean, I personally think that there's not, apart from NVIDIA, but actually using AI to provide a service to customers. I don't know who's making more money in that at the moment. They're making billions and billions through their ad engine, which is completely AI. I don't think people actually realize at that moment. They still think it's kind of interest targeting. So I'm very happy with Meta as a business. I'm very happy with how Mark Zuckerberg runs the company, in that I think he's a ruthless CEO and he's a good person to be running the company. I'm happy having my capital invested there. So what I am doing at the moment, where Meta has dropped down to this $620 mark, I do own this in my other portfolio. I'm thinking of buying 1 or 2 shares here. It's a company that I'm happy to sit on. I don't know how long until sentiment changes, because people are still worried about why are they spending so much money on AI. We did have some news that they're actually going to start doing compute. So they're actually going to do AI compute, which I think is very exciting as well, just to make use of any extra AI bandwidth that they have. So I think this is going to be next on my target. I might buy this next week, just to have it in the portfolio that it's a business that I'm happy to sit in for the long term. Aside from that, Rocket Lab, again, I've spoken about this before. I own Rocket Lab. My average price on Rocket Lab is around $5, and it has just been on an absolute run. I think people are now realizing the excitement around this company, and that there basically isn't a comparison apart from SpaceX. There isn't another one you can go after. And if you want to replicate what Rocket Lab has done, it's maybe you should value the company not on what cash flows it's doing at the moment, but how difficult it would be to replicate a company like Rocket Lab. I think that's kind of how it's getting valued at the moment, which is an interesting way to look at it, but I think it's very valid. So I'm holding on to my Rocket Lab as well. Holding on to my Nebius, of course, and holding on to my Grab, which has just been absolutely terrible this year to date. But again, the thesis hasn't changed for me. I am keeping a very close look on what happens with their GoTo acquisition, as I think that could be a very big catalyst, and also to see what they're doing in their Q4 results to make sure they're still growing as planned, their margins still look good, and what they're looking at for growth over the next coming year. And that's it. That's it for today. We've covered everything. Just wanted to give you an update about the new acquisition on my portfolio, which is Nebius, and then how I'm thinking about a few other stocks. I'm going to be doing some more research this weekend to think about some other ideas that I might be jumping into. In this particular YouTube portfolio, I am looking for other possible big wins. I want to do this is probably going to be a bit more speculative, to be honest, because we need to try and find companies that have got a lot of upside while the market's very high. So I'm going to be doing a bit more research on that this weekend, and then we might have some other stuff to add into the portfolio shortly. So thank you again for joining me. Any questions, drop them in the comments, or any stocks you want me to look at, please do let me know. And if you're interested in any of these companies as well, do let me know on that. I always want to hear other people's opinions. And apart from that, I will speak to you on the next one.